Brilliant. So good morning, everyone, and welcome to our Navigating Growth CEO Insights for SMEs. So my name is Joanne Creevy, and I'm the Client Services Manager at Canor Finance and Business Services. I'm joined today by CEO and founder of Canor, Larissa Feeney. Good morning, Larissa.
Good morning, Joanne. Good morning, everyone.
Larissa is a fellow chartered accountant, and Larissa is a lead entrepreneur for the Acorns program, as well as a contributor to both the Going for Growth and Ambition programs. Larissa is also a chair of the Donegal County Enterprise Board, a member of the Finance Subcommittee of the Atlantic Technological University, and president of Donegal Women in Business. So a little about Canor. We are a firm of chartered and certified accountants, as well as company secretarials, supporting businesses with their compliance, payroll, secretarial, bookkeeping, and tax needs. We are an award-winning practice, most recently awarded Online Practice of the Year and Client Services Award at the Irish Accountancy Awards. We also won Zero Partner of the Year for the fourth year in a row. So we offer transparent fixed monthly pricing. Technology and digital processes are the core of our operations. We aim to streamline your accounting tasks, making them more efficient and hassle-free for you. So we are experts at providing support at every stage of your business, from managing statutory accounting requirements to providing financial and business services. We're here to ensure your finance operations run smoothly. So over the years, we have carefully assembled a multidisciplinary team of professionals with specialists in areas including corporate and personal taxation, corporate finance, financial management, information technology, marketing, and company secretarial. So Canor is a full suite finance and business practice. As we have grown, our range of services have grown with us, reflecting the various needs of a wide and ever-growing list of clients. Today's format. So this morning's webinar is ideal for SME owners and managers and established entrepreneurs. It is important to note that the information contained in this webinar is for general information purposes only. For specific advice related to your business, you should always consult directly with an expert. I would like to encourage your participation during the webinar, so please utilize the Q&A or chat function to ask any questions you may have throughout the webinar. So today's agenda will begin with a brief overview of four key crucial areas for business growth: hiring employees, financing, profitability, and compliance. Next, we'll introduce strategies to effectively navigate these areas as you expand your business. You'll learn essential steps to ensure sustainable growth for your business. And finally, we'll discuss the importance of partnering with a professional to support your growth journey. So over to you, Larissa, there.
Thanks, Joanne. Great introduction. Thank you for that. Okay, so hi again, everybody. As Joanne said, the format of this webinar is Q&A. So what we've tried to do is put together some questions that we get asked by our clients throughout the various different stages of business growth. So from startup right through to scale up. So it's a high level webinar. So the idea is that just to give an overview of key considerations and to perhaps give some tips along the way around maybe aspects of business growth that you should be looking at if you are looking to grow your business over the longer term. And perhaps especially if you're looking to scale your business quickly. It is obviously individual. Every business is individual, and every business is unique. And therefore, what you want to do will depend on your own goals and aspirations. So some of this may apply and some may not. And that's the nature of high level information. As Joanne said, if you have any questions, please do pop them in the chat. And if you'd like me to follow up with anything afterwards, I'm more than happy to do that as well. Okay, so the first aspect of operational growth we want to look at is hiring employees for long-term success. So the importance, I suppose, of timing in hiring decisions based on the workload that you have, revenue projections, and overall business objectives. The major challenges that we see the clients report, and indeed that I've seen myself over the years, is when to hire. How do you know when the best time to hire is? the major challenge that small businesses have, of course, is cash flow. So how do you make sure that you have the right or the right amount of money to pay the salaries at the end of the month, and how do you balance that with business needs? So understanding what the cash flow requirements are for the business, maybe when to invest, but also the the right level to invest in. So, for example, if you're going to hire, if your goal is long-term growth, then how do you know the right level to hire your employees at the beginning? So do you hire junior employees, trainee employees, part-time employees, full-time employees, or do you go straight for senior level, executive level team members that could, I suppose, take work off your desk as well as grow their own teams? And that's one of the major challenges you have as a small business, because obviously, if you're going to hire a senior level member of the team at the very beginning or early in the business, that's a large investment. And then how do you know that you're going to get return on that investment relatively quickly? You're never going to get return on that investment quickly, but how do you know you're going to get it relatively quickly? And how do you balance that with having the cash flow to make sure that you can pay for that salary until the return on investment starts to pay back, you know? That's one of the biggest questions we get asked all the time, is how do you know when to hire? Um, the next challenge, the next point on that slide is other challenges that business faces. You hire more employees. So not only, so the biggest decision is when to hire your first employee, and then it's the level at which you hire them. So hiring your first employee could be it's a big decision in itself, because you're commissioned to pay a salary. Then hiring your most senior employee or a senior employee is a large decision because of the amount of investment it requires. But then as your business grows, the challenges you have as the team as it gets more in number. So in other words, you face challenges around structure, around policies, around procedures. The HR aspect comes into it that never does whenever you're operating by yourself or you and one other. But if you start to hire more employees, then HR policies and procedures become a real concern. So making sure that you're following procedure there, and that you have structures in place to allow your employees to grow within their own roles and progress within their own teams, and that you're building a culture for growth, and you're building a strong culture in itself that allows each individual to reach their own potential. So it's not necessarily only about success for the business, but it's also about success for each individual employee on the team. I remember, Joanne, myself, whenever I was going Canor at the very beginning, somebody asked me at one point, did I have an organization chart? And at that time, I didn't have an organization chart. And I can't remember how many was in the business, maybe 10 or maybe 15 people. But I remember it as been something that I didn't have and I should have had, because in order to understand how the business is going to grow and expand over time, and what current state looks like versus what future state looks like, you need to have it documented on an organization chart, so that reporting lines are very clear and everybody knows where they stand. So that's another tip. If you don't have an organization chart, regardless of the size of your business, it's a good idea to have one.
Larissa, you mentioned there, I suppose, as your employees grow, you have to consider like the HR aspects of the business and policies and procedures. And I suppose, like, what would you recommend if, you are a small business and, you need some support with HR? Like, I suppose there is partners out there, and I suppose bringing back to maybe when you were early stages, like what support did you seek for the HR aspect of the business?
Oh, yeah, that's a great question. So as you said, there's loads of companies that provide HR support.
Yeah.
There's some, but in my experience, okay, a business needs HR support as the team starts to grow.
Yeah.
In the first instance, around setting policies and procedures, having the employee handbook, making sure contracts are right, and making sure everybody's getting the correct entitlement to things like holiday leave, sick leave, everything that's basic, but is written in law and has to be done, right?
Yeah.
So that's almost like a once-off job in many ways. And then you need HR support as issues arise on an ongoing basis. If there's challenges perhaps with, sickness or with stress or overwhelm or, things like that,
Yeah.
you need help in navigating those issues. So there's a few different ways you can approach this. A HR support, a HR partner can give you a once-off service that will provide the policies, procedures, etc., and then dip in and out as needed throughout the year. Or alternatively, you can pay a monthly subscription to a HR provider who are there whenever you need them. Now, personally, I have never paid a monthly HR subscription. I've never felt the need to do that, but I have made sure that I've had people that I trust, partners that I can trust, that I can call on when needed. So, and that actually has changed over time in terms of the type of support that you need will change depending on the issue that that you're dealing with. So my advice to anybody on the call is to make sure you know who you need to reach out to. If you don't pay for that advice on a monthly basis, or you don't have internal support, and sometimes even when you do have internal support, you still need that external consultancy advice. Now, if you don't have anything like that currently, or anybody like that currently in your network, your first port of call will be local enterprise office or Enterprise Ireland, both of which will provide mentoring support or consultative support in HR that can help you get started. Like I remember for us going back to the org chart, one of the first supports we got from Enterprise Ireland was HR support, and it was in the area of building out the organisation chart as it currently is, and building out the organisation chart as it will be in the future, and then mapping how to get from where we currently are to where we want to go. And that was where the help was. So it was strategic HR consultancy advice, which was very helpful at that time. So it really depends on what you need, Joanne. But there's loads of support out there. And definitely Leo or EI would be the first place to go.
That's brilliant tips, and to know that there's loads of support out there. Larissa, I'm interested in understanding what contributes to long-term success when it comes to hiring. If you have any sort of additional strategies that you've put into place to ensure that, I suppose, it does, ensure the growth of the business aligns with the overall objectives of the business as well.
So do you mean, Joanne, in terms of ensuring that you have the right people in the
Yeah,
right places for the long term? Yeah,
yeah,
that can be really difficult
yeah,
because if you're a startup, for example, you need a certain type of individual who can wear all the hats and can
yeah,
jump into any particular role that's needed. And then as the business grows and develops, you may need a different type of person, somebody who can focus on one particular area, who can excel and go deep in an area rather than, going going across many different areas. So it's very much depends on the stage that your business is at. It's just important to have an awareness of the type of person that you need right now and the type of person you may need in the future, and whether you can hire now for roles that you currently need, but you will also need in the future. That's the challenge. So, for example, a mistake that I would have made in the past would have been knowing that the company was growing, but still only hiring for what I needed now rather
okay,
than hiring for the longer term. And that's a mistake I think a lot of business owners make because we're so focused on cash flow and
yeah,
what the business can afford, especially in the early stages. And advice I always would have got was, always hire for the long term. So listening to advisors and mentors as well is really key here
yeah,
because sometimes whenever you're in the weeds, you can't see the bigger picture. So that advice I would have got and would have valued that advice, always look to the longer term and hire for the longer term, even if it's a bit of an investment, even if it's a bit of a risk, it generally pays off and it will set you up for success and take work off your desk.
yeah.
That's what I would say.
And that org
Um,
chart probably really helped you plan too for the future and see where everyone is across the business.
Yeah, absolutely. I mean, the org chart and the help we got with the consultant that did it, what
Yeah,
they did was they set us up for the next stage of business growth. So
yeah,
then I knew, okay, where were the teams that I had to build out next?
yeah,
Where were the hires that needed to come in next? And you're looking at it through the lens of through a strategic lens rather than through an
yeah.
operational lens, which is really important. And that advice was fully funded by Enterprise Ireland. So
Brilliant.
that was really helpful. Yeah.
That is brilliant. Thank you, Larissa, for that. And it's just like some key actions now to take away from our hiring topic.
Yeah. So the first one is proactive workplace planning. This is really, really hard. And actually this came up in our own leadership meeting this week, Joanne,
Mhm.
we currently don't have a workplace planning software or system. which actually might be really important for us at the stage we're at now and for many other businesses. So some type of workplace planning, depending on the type of business you have or the service you offer, how do you know when you need your people and where you need them into the future, so not just today or this month, but over the next 6 months, over the next 12 months, as far as you can project. Revenue projections and cash flow, it'll come up probably under most of the headings that we look at today. The importance of your numbers. So in this aspect, or from this perspective, it's very much looking at it from the perspective of salary payments. Salaries are always the biggest concern for business owners, making sure there is enough money at the end of the month to make wages and to make payroll. And that can be the thing that trips up a business very early on. So knowing your numbers and knowing where the risks are there is obviously super, super important when it comes to employment. And it's not just salary payments, it's also, of course, the tax payments that goes along with that gets paid over to revenue. So knowing, the only way you can know that is by mapping out your revenue projections into the future and monitoring your cash flow on an ongoing basis. Okay, so the third one is really hard, aligning hiring needs with anticipated business growth. It was something that actually came up in a call yesterday for us ourselves. How do you make sure that you've got enough capacity to manage the incoming business? And the hiring of that capacity and trying to align that is really hard, because you have to, first of all, have trust that the business growth is coming. And then secondly, that the hiring, that, the employee can be hired to be there in advance of that growth. So there's an element of trusting the process there. And there's also an element of being okay with the investment, because as I said earlier, you're going to have a period of time where you're paying for an employee that's not delivering in terms of revenue. And that's okay, because that has to be expected. Okay, technology and partners, partnering with professionals is the final point there. And I've mentioned professionals already, using HR professionals that are on the market, and there's a lot of great ones there. But at the same time, there's a cautionary tale here, because, and I've mentioned it already, I have seen many businesses paying on a monthly basis for HR support when it's not needed. So it is an expense, absolutely, that is required within a business. It's just the level of that expense. I'm not too sure I'm not too sure if it's necessary in every business all of the time. It very much depends on the type of business that you're in. So consider that. There's also some providers on the market that will ask for a contract over the longer term, which is difficult then if you don't need them anymore. Leveraging technology, it goes back to workplace planning in this case, Joanne, because if you do need to plan out your workforce and to plan where they need to be, then technology plays a part there. But also from an employee perspective, using things like, and I haven't mentioned these already, but using things like psychometric testing, personality testing, things like that can really help build out a team in a sustainable long-term way as well, knowing what type of people you have in your various different teams.
That's great, Larissa. So just moving on then to financing growth, and just discussing what are the main differences between debt and equity funding and the other options available. Sorry.
Yeah. No, perfect. Thanks, Joanne. Okay, so obviously you can't grow without cash, and this is the major challenge for businesses is lack of cash. And whenever we talk to businesses, no matter what stage of growth they're at, if you're growing your business, growth is expensive. So how do you fund that growth is the question. And how do you fund it in a strategic way? And how do you get away from being strangled by cash? Now, there's always an element of that, especially in startup businesses. So there should be an awareness too that, not having cash is very normal in the early years of business. Okay, so the first major method of funding your growth, which actually isn't written here, is bootstrapping. So that's essentially funding your own growth from your own profit, and this is normal in particular in service businesses, Joanne, where you're making money straight away, and so you're putting that money back into the business, and then you're using that money to grow. Bootstrapping is a very slow form of growth. It also, it can also happen in project businesses where, for example, a founder might put investment into the business at the start to get the product to market. That's bootstrapping. Again, it's very slow, but it's obviously cheaper because you're not
Yeah.
paying for funding. So it is an option. And many businesses bootstrap. And you find with bootstrap businesses that they grow slower, but they could be there over the longer term, as a result of slow growth, so slow, sustainable, viable growth.
Mhm.
Okay, so in terms of financing then that isn't bootstrapping, that you've got two choices: debt and equity, essentially. So debt is whenever you borrow money. So the business borrows money from a third party. That's generally in the form of loans, for example, traditional loans from a pillar bank. Or there's various other lenders on the market as well. Apart from the pillar bank, there's lenders like Microfinance Ireland, which will lend to small businesses, I think up to maybe 30,000 or 40,000 or something like that. And there's lenders like Finance Fair. We did a webinar with Finance Fair recently, and they're an alternative lender to SMEs. But essentially, they are all debt, which means that they will lend the business money for a percentage of interest, and that interest is the cost of debt. So the business commits to that and pays that back over a certain period of time. The challenge with debt funding is that in general, there has to be some type of a track record within the business, especially for the pillar banks, because you go to apply for a loan for working capital or for growth or for capital expenditure, and the first thing they'll ask you is the last 3 years accounts. That's the first thing they'll ask for. So if you don't have that, then it becomes more difficult to raise debt. Now, debt is cheaper than the alternative, which I'll come to in a moment, which is equity. So it is certainly one that should be considered if it's possible. But it can be difficult to raise debt depending on the type of business and the stage of business, especially if you're in startup. So if debt is not an option, equity is another option to look at. Now, there can be a combination of the two, by the way. There can be debt and equity structures that come together. Equity is where the founder or the business owner gives away a percentage of ownership within the company to a third party in exchange for money. So that could be, if you're in a very early stage of business, for example, it could be angel investors where they come in and they give you, a period of a certain amount of money for a percentage of the business. And that would be high risk investment, or that would be viewed as high risk investment because they're coming in at a very early stage, maybe even, at idea stage. It could be that early where you're getting angel investment. Then you've got firms like venture capitalist funds, and they come in a little bit later, but it's still risky because perhaps there's a lot of potential in the business, but there's no proven track record. So they'll carry the risk that the pillar banks won't take on. But I mean, it's absolutely a viable option, and a lot of great startups access and indeed need VC funding in order to grow. Crowdfunding is another option. It's like very similar. You're giving away equity, but there's crowdfunding platforms on the market where you can go to a platform and start a crowdfund, and members of the public can actually invest in your company, and you can set a limit that you want to achieve. And again, it's very popular among perhaps startups that are a little bit different and perhaps will have a large following. There's a large consumer interest in the startup. It can be very popular. But I always say to clients never to discount the possibility of grant funding, which is the last word there on that particular point, because grant funding is available first of all for startups. We've mentioned Leo already, the local enterprise office, and Enterprise Ireland, both of which are great for supporting small businesses and large businesses in Ireland. And there's a few other organisations that do it as well, but they would definitely be the main two. The good thing about grants is that you've been given money in many cases. Some are repayable, but a large amount are not repayable. But you've been given money to support growth, whether that be through revenue growth or through capital commitments or through marketing efforts, things like that. And sometimes the grants are also to prove a concept. So like a feasibility grant you can get for a local enterprise office if you have an idea and really want some time to check whether the idea is feasible. So they can support that. So always make sure that you exhaust the grant options that are available on the market. Now, what we hear from clients and from some other businesses that aren't clients is that even applying for grants can be difficult. The paperwork that's involved, the form filling, and that is definitely an aspect of grant access that you have to consider. It does take time. But I mean, you could also argue, Joanne, that any of the other aspects of funding are the same to a certain extent. You
Yeah.
know, you do have to apply, you do have to put yourself forward, you do have to paint a picture. You have to demonstrate success, whether that be
Yeah.
proven track record or into the future. So they're all the same in that regard. But definitely, don't discount grants, I would say, and make sure that you're accessing as much as you possibly can.
Larissa, how can a business choose, or like, what would be your advice when choosing what's the most appropriate option for each business? I know that's going to be very personalized, but and I suppose it's different stages of the business as well.
Yeah, it's a great question, and you're absolutely right. It's very personalized. I mean, I've seen businesses that are really similar in their sector that they're in the stage of business that they're at, take very different routes when it comes to funding, purely because of the preference of the founder,
Mm,
or the other shareholders, or the preference of the board if they're supported by a board. Some founders are really aggressive, in terms of their growth aspirations. And some founders are a little bit more conservative. Like, for example, the podcast that we did recently with Kyron from Nexus,
mhm.
he mentions this actually on the podcast, where he said that at the moment they've just completed a funding round. And I asked him, will they be going out again to the market for further funding in the future? And he said there's actually discussion ongoing about that right now, because we don't have full agreement across all stakeholders what's the best path for the business in terms of future funding. So it really is very individual. My advice always to businesses at this stage is to make sure that you surround yourself by either advisors or board or mentors, as long as you have people, and it is generally more than one, who are advising you objectively on the right path for the business, and for the product or services that you are producing. Not necessarily the right path for you personally, Joanne. There is a difference, because there's the founder and there's the business. And at the start of the journey, they're both intertwined. But actually, you have to consider the business whenever you're looking at future prospects, and what is the opportunity for the business, and what gives you maximum chance of getting that opportunity.
Yeah, brilliant. Thank you, Larissa. Um, and I suppose, Larissa, we touched a wee bit on numbers there, but why is it crucial for businesses to have a deep understanding of their financial metrics? I suppose, and how this knowledge can really help with, I suppose, making decision making and long-term financial stability.
So I've mentioned this already, and it'll
Yeah,
probably come up in the next one again.
yeah,
No matter what type of funding you go for,
yeah,
whether that is even bootstrapping, even if there's no funding required, no matter how you decide to grow your business, the finance function is the foundation of business growth, in any business that I've ever looked at. And the importance of the founder and the business owner knowing the numbers that are important to their business right now can't be overstated. That 3% level, if you like, we always say, spend about 3% of your revenue on
yeah,
your finance function. And that applies no matter what size your business is. If you're pre-revenue, obviously it's different. But if you're generating revenue, that 3% figure applies. And it gets more important as your business grows. And even if I look at Kenor and do the maths on Kenor, we're at that level. About 3% of our revenue goes into the finance function. So the importance of making sure that the finance function is operating as it should. It's producing real time, reliable data that will allow you to make informed decisions around the best funding options for the business. And it's the first thing that any of these guys will look for. Any of the debt funders, the equity funders, and the government organizations like EI and Leo. No matter where you go for access to funds, the first question you'll get is, show us the management accounts, shows the statutory accounts if you have them, shows your projections, paint us the picture of what you're going to do. So I can't overstate the importance of numbers. And it's really difficult, especially for non-financial business owners, because non-financial business owners don't have a background in numbers. So getting to grips with this can seem really overwhelming. Um, and whenever I talk to businesses that are in this position, I always advise them, just you don't have to focus on every number, right? You just have to focus on the numbers that are important for your business right now. You might need to get a little bit of advice over what that is, but it could be something like margin, which I'll come to in a moment, or it could be something like accounts receivable. It could be something like revenue. It could be conversion rate. It could be anything depending on where you're at right now. Probably for those on the call or for those watching the recording of the call, they might be thinking, okay, for me, it's cash. I need to be looking at cash and I need to be looking at bank. But actually, the cash figure and the bank balance is the output of all of the other activities. So that's the last thing you look at. It's important, absolutely important. Of course it is. But it's what the activities that are leading into that cash balance. So, are your debtors paying on time, for example? Are your customers paying up front, or should they be paying up front? Are the operations effectively and efficient, and are you paying and are you not overpaying to any of your suppliers or utilities from an operational perspective? All of those are what's important, and the output is the cash. So yeah, but can't overstate the importance of the numbers, Joanne.
Yeah, that's great. Thank you. And this is just a little overview of the action list.
Okay, so as I said, having objective advice on the type of funding that's appropriate for your business based on the stage your business is at and its needs and its objectives. And of course, risk is another factor that I didn't mention. So that's a good reminder to us, because risk here is massively important. And this again is down to the individual, is how tolerant you are to risk and what's your risk profile. Because if you're more open to risk, you probably will be more aggressive in your fundraising, and you may bring in money that you need quickly and grow your business quickly. If you're less liable or less open to risk, you may be more conservative. And that may hinder business growth as well, which isn't always a good thing. So, I mean, it's really important to have that objective advice so you can get that balance. Analyzing your finance and analyzing, I should say, your financial position and cash flow projections, as I've already said, is always important, no matter what stage your business is at. And no matter what your goals and aspirations are for within your business, there's no business that I've ever seen that doesn't need a good financial process, Joanne.
Thank you, Larissa. And just moving on there to profitable growth. So how does a well-defined pricing strategy contribute to the success of a business? And I suppose considering approaches such as cost plus, value-based, and time-based pricing. Can you provide examples of how each strategy can impact profitability and client satisfaction?
Sure. So maybe let's start with pricing strategies,
Yeah,
because this comes up a lot with
yeah,
businesses. How do we price correctly? How do we know the right price? How do we know we're maximizing price for profit? Um, and there's a lot to consider here. So the first thing I would say is, look at, obviously, product versus service. And in product-based businesses, pricing is much more straightforward than it is in service-based businesses. Product, you know exactly what your cost is. So you know what the floor is, I suppose. You can't obviously sell for less than what you're buying it in for. Okay, that's the very basic. Service providers are a little bit difficult, because sometimes the service is the cost of the service isn't as clear. So that's the challenge. So to be aware as much as you possibly can be how much is actually costing you to deliver your product or service, and to do that exercise in the first instance, because then you know where you're starting from. I mean, I've met several businesses, Joanne, over the years, who don't know how much is actually costing them to deliver their product. Back to what I talked about in the last slide. If you're looking at your cash balance, then you're monitoring that number. But if you don't know how much it is costing you to deliver your product in the first place, then you're automatically possibly going to lead to less cash in the bank, because possibly underpricing your product or service. So it's something to consider. Okay, so once you know what the cost is, and you're happy what your starting point is, then you've got a choice of how to price. And every business has a choice of how they price their product or service. Most businesses will say things like, well, I have to price it at that because that's, what the customer wants, or that's what my competitors are doing. But that's still a strategy. Okay, so let me take you through some of the strategies here, just to try to illustrate by example. So the first one there is cost plus. That's a markup, right? So that's knowing what your cost is and then adding a percentage to it, right? Very straightforward. And as I said, very, very easy for producers in particular. There's loads of information online. I'll talk about margin in a second, but there's loads of information online on what margin you should be getting. So you can use that if you have a cost, if you're adopting a cost plus type of a model. Essentially, you know what your cost of your product or service is, and you're adding a percentage margin to that cost to get to your selling price. Okay, very straightforward. Another one is penetration pricing. So penetration pricing is that you are pricing your product or service low in order to penetrate. So you're looking what everybody else is pricing it, and you're going in lower than that. And that's a strategy. Now, it's a strategy, interestingly enough, Joanne, that a lot of startups would adopt without actually intentionally doing it. You know, they'll price a little bit cheaper because they're new and they want to grab market share. And that's absolutely valid. The challenge is then making sure that you increase prices as time goes on. Once you have achieved that market share, and you hope that you keep it. Another example would be, I've mentioned it already, competitive pricing. That's essentially looking at what the competitors are pricing and pricing accordingly. So it's very much going in line with the competitors, and making sure that you're in line with them. Obviously, this applies if you're competing based on price. You want to make sure that you're at or lower than than the competition in the market. Time-based pricing is one for the service industries on the call. It's, if you're literally pricing your time or your employees' time, which is very simple to do, but that can be very difficult because you're tied to time. And when you're tied to time, it can be hard to increase prices. It can be hard to demonstrate value, but it is absolutely a valid strategy, and one that many service-based businesses adopt. Another one, which again applies to a lot of service-based businesses, is value-based pricing. So value-based pricing in many ways is the opposite to time, because you're pricing based on the value that you're delivering to your customer or to your client. So you're deciding, or you're hearing, I suppose, from your customer what the value is, and you're pricing accordingly. That's a very individual in many cases, but can be much more lucrative for the business in terms of margin. And then finally, premium-based pricing. So that would be, premium-based pricing is where you're pricing at the top of the market. And I've spoken to several businesses recently who are intentionally and strategically adapting this method, because what they're doing is they're deciding that their product is of such a premium quality that they can place the product at the top end of the market, attach a premium price tag, and gain enough market share and margin to make the business profitable. So that's absolutely valid. No matter what pricing strategy you adopt, my advice always is to continually check what you're doing and to continually reevaluate your strategy, because you might find that penetration pricing works very well in the first year or two of business, but then you get pressure on margins and you need to change prices. Likewise, if you're competitive based pricing, you might find that your competitors move, so you will need to move. So always test and always adapt and change the market. The other thing is not to be afraid, and many business owners are actually express a little bit of reluctance around increasing prices, or addressing objections coming from clients or customers on pricing. So always test the market, and don't be afraid to test the market, because always remember that if you put your prices up, you can just as easily take them back down again if you need to. And some businesses are very comfortable about increasing prices, and some businesses less so. Like if we look at the challenges that the hospitality industry, Joanna's had over the recent past, I mean, the feedback we get from hospitality businesses is that if they were selling products at what they should be selling for the margin that they should be getting, we would be paying perhaps double what we're currently paying in coffee shops for a cup of coffee. So there's a reluctance on the part of those business owners, and they're genuine valid concerns, because obviously customers won't go to them if they're paying double for a cup of coffee in one coffee shop compared to another. So it's always a matter of keeping it under review. I do want to mention margin here as well, Joanne, if you don't mind, just because pricing is linked to margin. So whenever we talk about margin, I'm talking particularly about gross margin. And gross margin, for those of you that don't know, is simply your sales less your cost of sales. So it's the money you make on selling your product without any of the overheads. So without your admin costs, your insurance, your accountant's fees, leaving all of that stuff out. So it's just the pure profit you make on actually selling the product. So say, for example, if you sell candles, it's the price you get for the candle less the price you pay for the candle, and it's what's left over. That margin expressed as a percentage is really, really important when it comes to knowing your numbers. So back to the previous slide again. If you don't know any other numbers in your business and that's the only one that you know, that's probably the most important for most businesses. And regardless of the industry that you're in, there are standard margins across industries. So, even if you're in a different location to a competitor, you will be achieving the same margin. So if you don't know what your gross margin is right now, there's loads of information online. Go and have a look and make sure that you're in the region, in the range of where you should be in terms of margin. It's really important from a business owner's perspective to understand that you're making, the right margin on your product or service. It's really important from a funder's perspective because they'll want to make sure that they're investing in a business that's in around industry standard for margins. But also it's really important from a revenue compliance perspective, because if you're submitting returns to revenue that are showing margins that are out of sync with the norm, then you're more likely to get an audit from revenue, and nobody wants to get a revenue audit, Joanne. So just something to bear in mind. If you take nothing else away from this call, is just to check your margins, whatever they are for your industry, and make sure that you're in the range or you're very close to those.
Larissa, can I just ask a question? Just curious about, say if we do implement a pricing strategy, and you mentioned like testing it, because I suppose you can always revert back or move on to a different strategy. How long would you recommend to, I suppose, implement the strategy to see if it does work? When would you review it again?
I would always say 3 months. Now, it really depends. It does depend on the sector though, Joanne. So,
Yeah.
like say, for example, if you're selling products online, and selling products online can be really, really competitive, especially if you're on marketplaces, you'll know much quicker than 3 months. But if you're selling services, and if you're selling retail, or if you have several different lines going at once, 3 months is a good place to start.
Great, thank you for that. And I suppose just moving on to, how do payment terms play a crucial role in ensuring timely payments for businesses?
Okay, so back to the numbers that are important in your business. If you are in the type of business that gives credit, and not all businesses give credit, and certainly a lot less businesses give credit now than what used to be the case. But if you do give credit, and if it's standard in your industry to give credit, then that number becomes really important for your business. How much is owed in to the business? How long has that money been outstanding to you? And when are you going to expect it in? Because obviously, and it's basic, but I mean, the more money that is lying out with accounts receivable or debtors, and the less money that's in your bank, and the more strangled your business gets from a cash flow perspective. And what we've seen over the years, of course, is businesses that have really good structures and processes around payment terms have much healthier cash flow. And I have seen many cases where business owners don't actually know how much money they're owed, which is obviously very poor. So knowing how much money you're owed in, because generally we underestimate how much money we're owed, and knowing when you can expect that. And crucially, making sure that there's a strong system of credit control within the business, and that's not left to the business owner, so that there's somebody there that is consistently making contact with debtors, that is consistently following up, knowing when accounts are going to be paid, and that there's a software that backs that up, that sends out regular statements and regular reminders to customers and clients that their accounts are due. Now, I should also add on to this that if there's a possibility in your business that you do not give credit, then that is the preference. So, for example, Joanne, it might be the case, and this can be difficult as well, but for business owners, it might be the case that you should ask for 50% upfront, or some type of a deposit, or that you don't complete work until payment is received. Policies like that can really help from a cash flow perspective.
Just an overview of the key actions.
Okay, so the first one is related to the margin point that I made, looking at your direct costs and your indirect costs, completing a complete cost analysis. That will help determine what your margin is, know what your margin is, and know what your margin should be. It'll also help you, obviously, from a pricing perspective to know what your cost base is. So see what to understand what you can price at. And it'll help you, a term that I haven't mentioned yet is break even. It will help you determine what your break even point is. So, your break even point is where your sales match your costs so that there's actually no profit, no loss. It isn't a great place to be because you're not making profit. And the purpose of business is to make profit. So it's not a good place to be if you're breaking even, but you're not making losses, which is good. So the purpose of the first point there is just to get an understanding of exactly where you're at from a cost perspective, so that you know and remember that knowledge is power in relation to numbers. Payment terms I've mentioned. Now, just like the HR providers and consultants we mentioned at the start of the call, Joanne, there are also great credit control providers and support on the market. If you don't have that support internally, if the business is not of a size that it warrants a full credit control function, you can outsource elements to providers on the market that will provide that really strong professional service and represent the company really well, because sometimes collecting money can be quite emotional, especially for a business owner, especially if you've got a close relationship with your clients. It can be sometimes difficult to ask them for money, but it is business and it is necessary. But outsourcing that can really help cash flow. And using software like Xero to automate invoicing and chasing. I've mentioned software to help chase already. There's loads on the market. Xero is one of them. Xero is a bookkeeping software. Sage is another example of a bookkeeping software. But there are also credit control softwares that will link in to Xero. We use one called Chaser, and that links into Xero, and it will send automated invoices, automated statements, automated emails, just to remind the client or customer that there's a payment due. And all of that can be done in the background without manual processes, which can ultimately save time.
Thank you, Larissa. There's a question here on, as a service-based business, we struggle with setting prices that truly reflect the value we provide. Can you share some insights or examples of how a business can effectively use value-based pricing to ensure their services are valued correctly by clients?
Yeah, that's a really good question. Value-based pricing, as I mentioned already, is really hard, but really lucrative, right? If it's done right. So if you're in a service-based business, you absolutely should be considering value-based pricing. It's doing it correctly, though, is hard. There's a little bit of confidence that's required. Definitely a little bit of, getting over the fear of getting it wrong, because the reality is, Joanne, that if you're not been told in a service-based business, if you're not been told that you're too expensive by some of your prospects, then you're probably too cheap, that's the reality. So in terms of getting a system in place, I would say test and test and test again. Just continue to test. Don't be afraid to lose a prospect because your price is perceived as too high. They may not be the client or prospect for you anyway. But yeah, just continue to test the market is what I would say. I did see a comment come in there from Sarah. Hi, Sarah. Yeah. Xero is handy if you use Revolut Business, as they have an integration. Absolutely. Revolut Business, by the way, is brilliant. Obviously, Revolut we all love anyway, but Revolut Business is really gaining traction in the Irish market. Xero will integrate with almost all banks. I actually can't think of one right now that it doesn't integrate with, Joanne. I don't know if can you think of one
Bank
that
of
it doesn't?
Ireland still, or is that live again?
I think that's live again.
Okay.
I think it's live again, but I could be wrong. But Xero integrate with most, if not all, of Irish banks at this point. It took them a long time to get there. But Revolut Business, yes, there's an integration there. And Revolut Business in general is a super little system and can almost act as a little micro bookkeeping system in itself. If your business is really small, then Revolut Business can be all that you need in some cases,
Yeah, I've heard that before, and it's great. It's great to get the feedback on Revolut because it's quite efficient to set up as well if you are a new
Yeah.
business. Yeah.
Yeah, it's really easy.
Thanks for your comment there, Sarah, on that. What are the key compliance requirements for businesses, and how can businesses ensure they stay compliant while effectively managing their operations?
Okay, so This is okay. So what I always say around compliance is whenever business owners start, whenever you start a business, compliance is really, really important. Because it's brand new and you have to do it. And sometimes there's no revenue to pay for things like accountants or to pay for advice. So compliance becomes something massive that you have to consider because you're not familiar with it. Interestingly enough, as your business grows, it becomes less important because it's done automatically in the background because you have the professionals employed and you have the professionals in the business. So, of course, it's equally important as a process, but for the business owner, it takes up less headspace because you have the team there and you have the accountants and the bookkeepers and they're everyone there to take care of it. So if you're not at this stage yet, and I know we have a mix on the call, if you are in the early stages, then compliance is super important. The advice that we always give is to be aware of what your requirements are in terms of filing. Like we are still relatively at the start of 2025, Joanne. So if you don't know when your tax is due, for example, when your annual return is due, when your payroll is due, and when your VAT is due, then put it into your diary this week. Ask your
Yeah.
accountant and put it into your diary because compliance should never be a surprise. And doing one of these workshops at one point, and one of the guys on the call said, the accountant calls me up and surprises me and tells me there's always a surprise and it's never a good one. Your VAT is due, your tax is due. None of that is that's not the accountant giving you a surprise. That's you not being aware of what your obligations are. And that is that, and they are your obligations. So always remember that you can outsource the task of compliance, but you can never outsource the responsibility. It is the director of the business that's responsible for director of the business that is responsible for making sure that the business is compliant. Simple. And even if you have the best professionals in the world surrounding you, it is still your responsibility. It's a bit crap, Joanne, to be honest, right? Because you are paying people to do this for you,
Yeah.
but yet you're the one that's on the hook if it's not done. It is a bit crap,
Yeah.
but that is the reality of the situation. And when we have to sometimes call it out what it is, call it out like it is. So if you do, as I say, if you do not know when your VAT is due, when your tax is due, for 2025, put it into your diary, so that it's not a surprise. So whenever you get the call from your bookkeeper, from your accountant, or if you're doing the bookkeeping yourself, that it's not going to come as a surprise for you. And this is really critical whenever it comes to cash, because if you don't know when your VAT is due and you haven't built it into your cash flow projections, or worse, again, you don't have any cash projections, then that's going to be a surprise. And it shouldn't be a surprise. There should be no surprises in this area of business, right? You're always going to get something that comes out of left field. Um, you know, Something happens in the world, there's a war, the economy starts to fall. But in your business, in your little world of business, there should be no surprises here. So put it into your diary so that you know exactly when they are due. If you don't comply with your obligations, right, with revenue obligations or with CRO obligations with his company's registration office, if you don't comply, there are penalties, there are fines, and there is, of course, reputational damage from revenue's perspective. So if we start with revenue, um, like a long history of non-compliance with revenue will lead to audits. There's no doubt about it. Revenue have a huge amount of data now across all of our businesses, and they can compare, your business with my business and my business with, anybody else's business that they want to. What they tend to do is compare businesses within industries so that they, benchmark one business against the other. So if you're not compliant, then you will get a knock on the door from revenue. If you don't comply with company's registration office, they just fine. Like they'll fine you if you don't send in an annual return, and they'll continue to fine you until you do send it in. And then they'll request a statutory audit, which is additional cost. But crucially, they can strike off the company, and that would mean that your company no longer exists. So, and nobody wants that. So the advice here is to know what your responsibilities are as a business owner and as a director, and to be aware of them, put them in your diary, because as a business owner, it's your responsibility. Okay, so there we go. Create a calendar. There we go. Create a calendar that outlines your tax filing date, and it doesn't have to be really complicated. I think some people will automatically remember these things anyway, but if you're the type of person that doesn't, and if you're, that person that I described that gets annoyed when the accountant surprises them with a phone call that they've added due, then you're the type of person that needs this help. Put it into your calendar so that you're aware and that you expect it. And crucially, you take control of the relationship with your accountant as well. I mean, I'm assuming that everybody here has one, but remember the relationship with your accountant is a professional one. So, you're not been told what to do. You're in partnership with your accountant to meet the compliance requirements of your company. You're responsible for it. So, it's also your responsibility to hold your professional advisors to account in this area if they're not doing it in a timely manner. We have put their outsourcing compliance tasks to qualified professionals. I mean, look, Joanne, we're going to say this, right? We're accountants. So, I mean, obviously, we're going to say outsource your compliance to accountants. I mean, unless you are an accountant and a business owner, then you should be outsourcing compliance to an accountant. There's absolutely no benefit to you doing this yourself. I mean, I am an accountant and I outsource my compliance to an accountancy firm. We are accountants and we outsource it. There's absolutely no benefit. It's a non-value add activity for you as a business owner. Think about what you should be doing regarding raising finance or generating revenue or increasing efficiencies. But sitting down and filing accounts or trying to work out bookkeeping software, it's not in your zone of genius, let's just call it, in most cases. And it's better off to outsource that. And generally speaking, it's a better use of money to outsource it, and you can use your time in a better way, raising revenue for your business. Accounting software today is a no-brainer for the vast majority of businesses. Now, there's some very, very small businesses that don't need it, and that's absolutely fine. But most businesses require software, and not just software, require online software. I mean, the days of having a debate between offline versus online systems are gone. It's an online system. It's a continuous investment in your finance function, and it's part of that 3% that I mentioned earlier. That should be invested in your finance function on an annual basis. There is loads of software on the market. That can be a bit overwhelming as well, actually. Choosing the right software for your business. So if you need to seek advice on that, we run some webinars on a monthly basis that can help you do that. Essentially, they all do the same thing. I mean, it is bookkeeping software that you're investing in, and they all do it. I think the question is, who does it better for your type of business? Is there a particular aspect of the software that's more applicable to your business than to others?
Thank you, Larissa. And then just what happens if I miss an annual return?
So I've already touched on this, Joanne. Yeah, I already touched this. I think we just put the slide in just to kind of emphasize the point a little bit. But yeah, so the advice is know when your annual return is and don't miss it.
Yeah, exactly. So thank you, Larissa, for all your insights there. So I suppose everyone on the webinar, your feedback is important to us. So if you found the webinar helpful today, or if you have any feedback, can you please share a review? And I'll pop in the link in the chat here now for that. I just want to I suppose give you an overview of one of another, I suppose we have various webinars that I suppose Larissa touched on that we have throughout the month. So you can get a link to those through our resources page on our website. But there's one here that might interest you. So it's Tom Francis, Head of Accounting. He provides a webinar on tax strategies. So we'll also share a link on to that on our follow-up email. But the next one is March 19th. So I suppose like we offer support to business in various areas, including the company formation, company secretarial, annual accounting compliance, year-end services, as well as bookkeeping and VAT services. So if you do have any further questions or interest in learning more about our services, do get in touch. I'll also put the link to book a call. You can book it directly with myself or the client services team. We'd be happy to take you through more information and find out how we can support your business. And the information there is on the slide. So thank you to everyone for your participation and to you, Larissa, for sharing your valuable expertise and facilitating the Q&A session through the webinar. We will send out a recording of the webinar afterwards in an email. And if, as I say, if you have any questions at all, do get in touch. I'll be happy to help with those. So thank you so much, everyone, and to you, Larissa.
Thanks, Joanne. Thanks, everyone. Have a great day.
Thank you. Bye-bye.
Bye.
Bye now.